We had a big news week in the semiconductor business this week. We had earnings from Intel. We had earnings from AMD. Both stocks going in opposite directions. We also heard from Nvidia this week, including two news items that crossed just this weekend that are sending the shares higher. But possibly the biggest news of the week was actually Supermicro announcing that their auditor, Ernst & Young, has resigned from the company. Interestingly enough, even when Supermicro announced the resignation of Ernst & Young didn't even agree with all of that statement. We'll talk about some of the things that caused the auditor to resign, what this means for the stock, and then we also have to look at the segment from a technical perspective. I tell you what, when you wake up on Monday or when you're watching this video, there can be buying opportunities, including one of the biggest broad-based ETFs. There are buying opportunities. If you have the balls to step in during the week of a presidential election, well, I tell you what, there's going to be some opportunities. We got all of that to cover on today's show. What is going on, investors? Hopefully you guys are doing well out there. We're going to start things with Nvidia, which started the week at about $142 per share. Saw its shares down by over 4.6%, but I'm seeing in the after hours shares have risen by about 3% on the news that Nvidia is going to join the Dow Jones Industrial Average, replacing Intel as the new semiconductor giant in the Dow Jones. Now, the Dow Jones Industrial Average is more or less an antiquated. It's shown on the financial newsletter or the financial news networks really out of habit rather than anybody really paying much attention to it. Now, one thing though, as it relates to Nvidia as being in the Dow Jones Industrial Average, is it might mean that Nvidia continues to split its stock in the future. That is because the Dow Jones Industrial Average, one of the reasons why almost nobody pays attention to it, and there's no index funds really tied to it, is the fact that the Dow Jones is a price-weighted index, meaning the higher your share price, the bigger weighting that you get inside of the index. Most other indexes are based on market cap, so the size of the actual company, because you know that a company could be like a $4 trillion company and have a lower share price than, say, a $4 billion company just based on the number of shares that are outstanding. So Nvidia, to maintain maybe an equal weight inside of the index, could potentially split its shares in the future. We've seen that with Apple. I've seen that with a number of stocks inside of the Dow Jones, is that they're far more frequent to split their stock because they are in the index and they want to maintain maybe kind of a neutral weighting inside of the index. That would be all up to the company though. Now, we also got news this week that Nvidia is potentially in talks to invest in Elon Musk's xAI startup. And so this is according to reports. Nvidia didn't respond to the comments, at least when Seeking Alpha reached out. But the most important thing that I think we have here is the startup, this is xAI, is trying to raise money at a $45 billion valuation. This would, I think, be more than what Elon Musk even paid for Twitter. So this is a rapid rise in valuation for this company. Interestingly enough, is xAI raised money earlier this year at a $24 billion valuation. So rapid rise for xAI. We'll see if Nvidia invests. Now, this has been kind of the MO for Nvidia over the past year. That relates to our next topic with them, is that Microsoft is going to spend about $10 billion renting AI servers from CoreWeave. CoreWeave is a cloud computing provider that Nvidia has been giving priority shipments of, meaning that CoreWeave is getting shipments ahead of Microsoft, ahead of Amazon, ahead of Oracle, ahead of Google, certainly. And so it's allowed CoreWeave to build out a much larger data center than it would have if it didn't have this investment and this partnership with Nvidia. Some people have raised red flags around this because they call this maybe somewhat unethical by Nvidia. It could be illegal. I don't know. I'm not familiar with those types of laws. What I do know is this is probably a smart strategy, at least from an investment standpoint, for Nvidia, in the fact that they give CoreWeave priority shipments, they make an investment in the company, and then instead of having one-time purchases of GPUs go to Microsoft, well, now Microsoft has to take money out of their pocket and spend it with CoreWeave, which again gets priority shipments from Nvidia and again has an investment from Nvidia. CoreWeave is likely to go public if things stay red hot in the semiconductor space. probably sometime next year. Now, moving on to Intel. Start of the week, interestingly enough, right at about $23 per share and kind of had an up and down week. Ended up over 7.8% higher after reporting its earnings, but roughly flat on the week. When you stretch this out to larger time frames, Intel is still significantly under prices that we saw earlier this year. About 6 months ago, it was about 23% higher, and year to date, shares of Intel still struggling, down 53%. But could the company be making a comeback? We got maybe a small window into that when the company announced their Q3 earnings. Revenue came in at about $13.3 billion. That was still a decline year over year by about 6.2%, but the company did provide somewhat rosy guidance, or encouraging guidance, probably a better way to say that, between $13.3 to $14.3 billion for the upcoming quarter. The consensus estimate was about $13.7 billion at the time. So if the company is able to come meaningfully over that, certainly closer to 14.3 or even higher than that on the revenue side, that'll be very encouraging for Intel. When we dived into the financials, there was a few things of note. The company did have to recognize some restructuring charges by about $5.6 billion here, hurting their operating results. They also recognized about $3 billion of operating costs up in the cost of goods sold. So all totaled together, you had a little over $8 billion. In fact, closer to about $8.6 billion worth of restructuring costs that really negatively impacted the operating income. If you strip that out, the company probably lost about $1 billion, maybe just south of that, compared to last year when they lost about $8 million operating the business. None of this is good, and none of it gives us a ton of confidence, even when the company announces their revenue in the next quarter up over $14 billion. They're still going to be losing money from an operating perspective, but when you fast forward maybe 365 days, maybe even 2 years out with Intel, will this restructuring on their marketing and their operating side and their cost of goods, will it allow the company to finally turn a profit? The other question that you have to ask yourself is, where will the semiconductor business be a year or certainly 2 years from now? It's certainly red hot, certainly from a server perspective. Even when you look at kind of notebook and desktop PC, which continues to be the strongest form of business for Intel, will that still be as hot as it is today? Because certainly if you have a down cycle, well, this company will certainly feel it probably even more than other companies. Now, like we said, notebook and client computing and desktop computers, still the bread and butter business over at this company, but you did see declines year over year on the revenue side from 7.9 down to about $7.3 billion. It's still the most profitable business. In fact, one of the only thing that is driving profits is the client computing group. Off of that $7.3 billion in revenue, they earned about $2.7 billion in profit. The rest of the business generates very little profits. Data center, which is absolutely red hot right now. In fact, we heard from all the mega cap companies that are investing heavily in cloud computing, that is Amazon, Google, and Microsoft. They said that they are spending lots of money this year and they're going to spend even more next year. Well, unfortunately, it's not really flowing to Intel. Just 10% growth year over year, up to about $3.4 billion. But on the profit side, they make just a paltry $347 million. Your network and edge brings up a little bit of profit, but it's really this Intel foundry business which continues to bleed money for the company. Off of just $4.4 billion worth of revenue, company had to recognize $5.8 billion in losses. That's a dramatic acceleration from the $1.4 billion they lost last year. So you saw just dismal results from the revenue side, that you actually had revenues decline in the foundry business, which again makes you wonder, if we look forward a year, 2 years from now, and demand for semiconductors that levels off, if not cools off, well, the foundry business is not going to be a good business for Intel, and it certainly isn't today. Now, the company is also, as you know, shopping Altera, a company that they bought several years ago by I think about $14-15 billion. They're trying to shop it around and get either equity investments or maybe even sell the whole thing for about the same price. Unfortunately, revenues in that business unit declined from $735 down to $412, and operating profits just $9 million. So it has declining revenues, and it's a break-even business. I don't know how many companies are going to want to step in there unless they see a lot of deficiencies that Intel has. running that business. Now, all things being considered, a lot of the bad news with Intel was already priced in based on the year-to-date performance and even over the past year. And shoot, you could stretch this thing out over 5 years, and just a lot of bad news was priced in with Intel. I think going forward, a lot of the results that Intel are going to produce is going to be on the backs of the company and on the backs of the CEO, but also on the back of the semiconductor business, because like we said, the business of semiconductors is red hot right now. And if it stays red hot, well, the odds of Intel turning things around and at least maybe performing up to par with the rest of the semiconductor industry, which has seen its share prices skyrocket, Intel has a high likelihood of maybe being able to pull that off. But if the semiconductor business at large begins to cool off, well, this company is going to continue to perform as poorly as it has really over the past decade, believe it or not. Now, company that has benefited from the demise of Intel is Advanced Micro Devices, but it saw its shares go in the reverse direction as shares of AMD started the week at 158, down over 10%. To finish the week at 141. You'll want to stick around or at least jump to the timestamps and look at AMD from a technical perspective later in the show. Now, year-to-date, shares of AMD have slid down by about 4%, and even over the past 6 months, they've been roughly flat. So Advanced Micro Devices has got some things that they need to work on, at least from a share price perspective. Now, revenue came in at $6.8 billion for the company. That was still an increase year over year by about 17.6%. But what came up short was the fact that the company gave guidance coming in right about $7.5 billion. They always give you this plus or minus $300 million. So I guess it could be as high as $7.8 billion or as low as $7.2 billion. This will be for the fourth quarter for AMD. Unfortunately, Wall Street was expecting a number just over $7.55 billion. So Wall Street seeing kind of meeting expectations and in some cases maybe coming in underneath the expectations for AMD, somewhat disappointing. Now, what's not disappointing, though, is the fact that they've captured a ton of this data center business. Look at over the last year, you went from $1.6 billion in revenue all the way up to $3.5 billion in revenue. That has skyrocketed your operating income at AMD on the data center business from $300 million last year all the way up over $1 billion. The rest of the business units outside of client computing are not doing that well, including gaming, which you'd kind of expect with the console sales basically kind of at a peak cycle or certainly coming down from a peak from $1.5 billion in revenue last year down to $462 million in revenue and basically just a break even from a profit perspective. Client computing, which we saw over at Intel, really had a decent quarter from a revenue and certainly a profit perspective. Also similar type of story for AMD, and then also the embedded, which is kind of a custom silicon business. We saw revenues decline from 1.2 billion down to about $1 billion, and that impacted your operating income. All told, though, the data center really grew quite a bit, and it drove your operating profits from $224 million up to $724 over at AMD. I think, again, when we look at AMD technically here in a moment, there are some opportunities for the stock, and I'll point those out later in the show. Now, we've got to get maybe even, cue the kind of somber music, because now it is time for Supermicro Computer. It saw its shares drop just over the past 5 days by 45%. Over the past month, shares of Supermicro are down 38%. And despite being one of the hottest stocks that are being pumped on Wall Street, being pumped on YouTube, being pumped on financial networks, year to date, shares of Supermicro Computer now down about 8%. This follows that their auditor has resigned the company, which is something that is actually incredibly rare, because I think probably when the auditor resigns, they might have just done a bunch of work for free and maybe not even got full payment. So for them to resign shows you that probably a lot of bad stuff is happening, including Supermicro extending the deadline to deliver their annual results until December 31st. This annual report was due, I think, a month or so ago. So investors are dramatically selling off Supermicro Computer, as they should, is if a company can't deliver their annual results and the auditor resigns, it means everything that you've seen from this company, you just simply can't believe. Even when the company announces that the auditor is resigning, we are seeing discrepancies. Believe it or not, Supermicro Computer filed a Form 8K, which is just 4 or 5 paragraphs long. Believe it or not, Ernst & Young had to come out with a statement saying that they agree with a third paragraph, they agree with a sentence over here, they don't agree here. Could you believe that Supermicro Computer can't even get the auditor to agree on the statement that the auditor is resigning the company? In fact, when you look at these sentences inside of the resignation announcement by Supermicro Computer, I think it tells an even fuller story. Underlined here on the screen are the sentences and the segments of the resignation announcement that Supermicro had. Underlined in red are the portions that Ernst & Young agree with. Ernst & Young came out with a statement said that we don't agree with certain segments, including this top segment that says Supermicro Computer has begun the process of identifying a successor independent registered accounting firm, basically meaning that they've started to look for a new auditor now that Ernst & Young has resigned. Now, this search could be as simple as a Google search or maybe a phone call or formal interview process, but Ernst & Young saying, well, we don't know about that. Now, it gets even deeper than that. Supermicro Computer will authorize Ernst & Young to respond fully to inquiries of the successor independent registered public accounting firm once selected. I would assume that Ernst & Young probably will do that, but my guess is Ernst & Young doesn't have an obligation to do that because this is a new firm. This is a firm that has to do their job, and they don't need necessarily Ernst & Young to do their job for them. Now, Supermicro Computer does not currently expect that resolution of any matters raised by Ernst & Young or under consideration by the special committee, as noted below, will result in any restatements of its quarterly reports or fiscal report 2024 ended June 30th, 2024, or any prior fiscal year. The fact that Ernst & Young would not agree to this statement, that any findings by any audit company hired by Supermicro Computer won't result in restatement of financials, Ernst & Young says, yep, we can't actually agree to that. In fact, they said very politically, we have no basis to agree or disagree with other statements inside of this financial document. So Ernst & Young is actually not sure if this company has to go back and restate financial documents. That means anytime we've done an earnings video, anytime you've looked at the financials at Supermicro, it could all be a lie. It could mean that this company is a complete fraud, and what it likely means is executives from this company, at the very least, if they are extradited maybe back to the United States, could be subject to actual jail time. Actually, there are people that work at Supermicro, including the high-ups of the company, that will probably end up in jail. Now, Ernst & Young said they were hired on March 15th, 2023 to perform an audit of Supermicro's fiscal year ended June 30th, 2024. So the company is on a slightly different fiscal calendar, and that ended, the fourth quarter was actually in June of this year. Now, in late July, Ernst & Young communicated to the audit committee, which is part more or less of the board of directors at Supermicro Computer, that they had concern about governance, transparency, completeness of communications to Ernst & Young's internal control over financial reporting. Basically, Ernst & Young saying they don't trust this company at all. Now, timely filing of the company's annual report was at significant risk. This was back in July. So you can probably understand who tipped off Hindenburg Research as they came out with a research report on a lot of this stuff. You can probably imagine there was maybe some employees over at Ernst & Young, or at least some communication that was intercepted there, and that is what tipped off Hindenburg Research. Now, Ernst & Young continued that they are resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management's and the audit committee's representation and to be unwilling to be associated with the financial statements prepared by management. And after concluding, we can no longer provide the audit services in accordance with acceptable law or professional obligations. They're basically saying, we don't trust this company. We think the financial documents that they've shown us, we can't believe them. We can't believe anything that comes out of the mouths of the executives or the audit committee, which is supposed to be independent and run independently. Ernst & Young doesn't trust them at all. Now, for Supermicro's bit, they have hired a large law firm called Cooley LLP, which is based in Silicon Valley, and a forensic accounting firm called Secretariat Advisors. That's a great name. They were hired to perform an investigation on behalf of and at the direction of the special committee. Now, the special committee, again, is somebody that Ernst & Young doesn't even trust. So as of this date, the review remains ongoing, and the final findings and recommendations have not been communicated with Ernst & Young or the board of directors. Needless to say, folks, Supermicro Computer is like a nuclear waste site. If for some reason you think investing in this company is a good idea, I would turn off this channel. I would stop watching, because anything that I have tried to teach you here on this channel and over at the Vesta channel is clearly not getting through to you. Supermicro Computer is probably even more risky than pulling the slot machines in Vegas or rolling dice or playing blackjack. In fact, I think you probably have higher odds of success going to Las Vegas and legally gambling your money than investing in a company where the auditor has to resign, and even in the resignation letter doesn't even agree with what Supermicro said. I don't believe anything that these executives say. I don't believe even the financials that we've seen earlier. In fact, when I saw Supermicro Computer's financials back in April, 6 months ago, I called Supermicro Computer. This was before any investigation by Hindenburg Research. This was also before the auditor. This was before all of this smoke. In fact, at the time, I believe Supermicro Computer was an $850 stock. Now, post-split, that would be an $85 stock. At the time, I called Supermicro Computer $150 trash, which basically means it would be a $15 stock after the 10-for-1 stock split. This was 6 months ago, and I looked at the financial documents. Even the financial documents that Ernst & Young doesn't even believe today, it was enough for me to believe that Supermicro Computer was a trash stock. Now that I know that the document that I was reading that indicated that the company was in terrible financial position, this was 6 months ago. Now that I know that those financials are probably not even real, the odds of this company actually being around and not going bankrupt and not going to zero, I think, are almost slim to none. If you have Supermicro Computer stock, my advice would, you should have sold it back in April. If you didn't sell it on the Hindenburg report, somebody needs to shake you and wake you up. When companies have these types of reports coming out, it is a bad news. It'd be just like if your girlfriend was out late one night and then didn't tell you where she was, and then you looked in her phone and she had a bunch of text messages from other men. If you stay with her, you get what you deserve. If you continue to hold and want to buy Supermicro Computer, you'll get what you deserve. Now, let's move over to the technical segment. We'll look at Supermicro if that's even needed here in a moment. But folks, we've got a buying opportunity. Now, do you want to step in the week of the elections? I'll let you to decide on that. I haven't been buying anything, but we have the SOXX here. Now, since late 2022, we've been locked in this kind of very steep upper channel. Now, I expect this channel at some point to give itself up, and then we revert back to what I would call kind of the longer term trend. We're more in an intermediate trend here. I would assume that this breakneck intermediate trend that is really, really steep, that'll give up soon. Is it today? Is it this week? I don't know. But if it does, we have much further to go on this one. But if you don't believe that and you want to step in here, there is a trade set up if not kind of an addition to a long setup. You have some lows here at 203, also slightly lower than that at 199. If you want to play a trade here, you've got a really nice setup. You could play the break of this trend. I wouldn't want to see that. That's why I'd probably set my stop loss a little higher, probably up here at about 207. So you're playing about $13 to the downside, with the upside here that we find some support either slightly lower or higher, and then we come at the least back to the middle of the channel, which these things tend to do. That would take you back up to about 260. That would be $40 in upside. A bigger upside would be a much higher high, probably back into the 280s, maybe even higher than that, back into the $300 per share. That's your setup with the SOXX. The SMH, which is highly more concentrated in Nvidia and Broadcom, I believe, that is working its way back to the middle of the channel. If you have a larger sell-off based on maybe election results next week, that is potentially could happen. You could have a buying opportunity here with the SMH. Nvidia is starting to walk back to an area where you certainly can buy this one. This one also in a much longer term trend, but we've been focused more on this intermediate trend, which is still very much intact. Shares of Nvidia probably could be bought if you want to. Again, you're stepping in front of a freight train, which is the elections. Also, freight train with Nvidia is they report earnings on the 20th. Their earnings this quarter I don't think is as important as their outlook, which will include more sales of Blackwell. AMD technically broke down a little bit this week, but it did find resistance at a pretty logical area at about 161. We're still making a series of lower highs. It has not been confirmed, though, with a lower low. So you're actually approaching an area where you can buy this one. Again, we are buying these ones on very steep intermediate term uptrends, but in the case of AMD, this trend is actually held since 2016. This is an area where if you want to buy AMD, you believe in them, you can buy that one. Now, Broadcom has not given back anything. This one's still setting up at the top of the range. We didn't talk about it this week, but Broadcom had some news come out this week that they're working with OpenAI on some custom silicon. No surprise there. Company doesn't report their earnings till December, but the company will probably move with the broader markets this week if they do move on election news, but it'll also potentially move when Nvidia reports their earnings about 3 weeks from now. Intel had obviously the most positive week, at least from kind of a one-day perspective, but shares are still down in a range which are pretty typical. It did find some footing at about $19 per share, but it wasn't able actually to eclipse the highs that it made after its rebound of its previous earnings report, but you're kind of flagging out here with Intel. Not super excited about this company. Again, fundamentally has to line up more than technically, but technically Intel doesn't look too bad here. Understand that you'd want to stop loss at about the $18, $19 range. Qualcomm looking really, really strong here, continuing to make higher highs, higher lows. It's working its way down. Further pullbacks in Qualcomm will alert you of, because that can be a great buying opportunities. TSM's looking absolutely fantastic. It has just confirmed a new higher high. You're waiting for pullbacks in TSM. ASML, we've talked about, is approaching an area. In fact, it's in an area where you can buy this one. It is still in that range. If you're dying to buy ASML or want to add to or start to a position, that is an opportunity for you. Now, NXP continuing to kind of consolidate in a tight range here, just hanging out. That one's still looking relatively good. We have to stretch ARM Holdings back out to a daily view. This one's at an area where you can buy this one. Also on Monday, you'd want a stop loss on this one, probably right here at 135. So you're paying $6 to the downside on this one, with the upside back to a new higher high, which would be about $30. So you've got about, what is that, 4 or 5 risk to 1 on this one. This one's looking pretty good. I might actually step in there and buy that one, I guess. Not with a ton of money, but in a trading account, I'll tell you what I'll do, whether it's worth anything or not. But in a trading account where I'm trying to make some really short-term money, and in short-term money, you're willing to risk to lose a little bit. The SOXX I'll put on a trade. ARM Holding look good. I'll probably put a trade on there. Now, SMCI, we talked about how we kept this downtrend line on, and I probably should trade this downtrend line to red just to give you a signal that's not a time to buy. We did temporarily break out of it, but obviously on the news of that dismal report that their auditor resigned, we had a big drop in shares. I'll put a fake red candle on there so you can actually see the magnitude of that. We've talked about for several weeks now. You would come back to this consolidation area here. This would provide some support for the shares. This level is probably not going to hold. I think the news is going to get worse for SMCI. This is why I've called it a $15 stock, because where is $15? It's actually the convergence of a much longer term trend. The upward trend, believe it or not, Supermicro computer pulls down not just to 15, but all the way to 10. A long-term uptrend is actually still intact on this stock. And believe it or not, depending on if you can get management put in jail and new management put in, or the company kind of reworks itself from an organization perspective, you know, I might step in here and buy, because technically it's a buy all the way down here at 10. And this is why we pay attention to the technicals, because you guys are probably saying, well, no, you're just saying this now. No, I said this actually in a video I published 6 months ago. This was when the stock was up here at $80, split adjusted, up over $800. I said, just wait until it pulls back to about $150. That is when you would buy SMCI. Now, with all the fundamental stuff, with the auditors and all that stuff, it's certainly not a buy unless all of that gets changed out. But all things being equal, you wait until you pull back to technical trends, have patience. In fact, the best investors, and this is probably a really good tip, the best investors do almost nothing for long stretches of time. And you just wait for your opportunity. Look at Warren Buffett. He's sitting on his hands. He's sitting on a bunch of cash. But watch, when the opportunity comes, he is going to pounce. And that is what great investors do. These YouTubers that are publishing videos every other day, buy this, sell this, Jim Cramer every day, buy this, sell this. That's not what a great investor does. That's what a content creator does. I'm trying to teach you how to be a great investor. I don't really care what this content does from a monetary perspective or a viewership perspective. It's about making money. Now, Dell Computer obviously benefiting from the fact that Supermicro Computer, probably at the very least, is going to see some executives find themselves into a prison. And Dell Computer still looks good. Could make a new higher high up here at 180. Dell Computer reports their earnings just later this month, it looks like, on the 26th. Micron Computer fell back a little bit. You could buy this one. It's sitting at the middle of a range. You'll have a stop loss at about $85 on that one. Lam Research sitting in the middle of the channel. Again, when you're in the middle of the channel, it's not the bottom of the channel. Bottom of the channel, you want to be very, very aggressive. That's an area where you can be aggressive because you know where to set your stop loss. If LRCX is at the bottom of the channel, the previous lows are here at 31. So you would not want to see even a break of this trend could cause you to sell. You could even have your stop loss like $2 under you buy it, because if you break this trend, it's a bad sign. But at the very least, you get out at the previous lows. In the middle of the channel, understand that you could continue to walk back to the bottom of the channel. So these are areas, if you do buy, it's not a big purchasing. So if you wanted 10 shares, you might buy 1 or 2 at that level. Applied Materials also in the middle of the channel. Again, an area where if you wanted 10 shares of Applied Materials, you would buy potentially 2 shares. Further back, that is where you are far more aggressive. Understanding, though, if you're aggressive at that area, you're putting stops, because if these areas break, you tend to have some major declines. But when they hold, and again, they often hold consistently over a long period of time, if they hold, you're looking at massive gains. Great investors, folks, sit on their hands and don't do anything. And in fact, wait for opportunities. If you've waited for a while to get in the semiconductor business, the SOXX is presenting an opportunity. Also, ARM Holdings presenting an opportunity, understanding that the company reports their earnings just 3 days from now. I'd probably wait until they report those earnings. Folks, that was the Semiconductor Show for November 3rd. We'll be back next week. And until then, have a safe week and a fun week, and good luck with your investments.